Well, hello there. It is me again, Katrina. I have been in work mode, and I know that you guys have too. I'm excited to be back with you guys today. I wanted to talk about a bunch of stuff, but I wanted to talk about something that's like relevant to what's happening right now. So, the tax deadline ended April 15th, which was last week, last Monday for 2023 tax filings. And I know some people went on extension. We've got lots. I've talked to my accounting friends in the community, and lots of extensions this year, which I'm glad to hear because that just means that people weren't necessarily ready or still needed to gather a few things and wanted some time to do it, right? So instead of just rushing to get things in, and sometimes it was on our part too, like, we just got overwhelmed, and instead of trying to rush and throw some things together, you want to do it the right way. You want to take the time to actually sit down and be able to focus and really do, make sure you dot all your I's and cross all of your T's. So that's what a lot of us have done too. Sorry, I'm turning my phone off. But what I want to talk to you guys about today is what to do if you can't pay your taxes. So I know some people held off on filing, or at least even filed an extension because you may owe, and so you're kind of just holding off to see, like, okay, maybe I'll come across some. I know my next season, my your big season's coming up, so you're planning on gathering the funds then to pay. But I do want to talk to you about some solutions that you do have an option for if you can't pay. Um, and I do one of the things that I definitely want to recommend is whether you can pay or not, file. If you didn't file an extension, make sure that you get that return in as soon as possible. Interest and penalties start accruing daily after April 15th. Even if you filed an extension and you owe, there's interest that's still accruing on the balance that you owe. The beauty of filing the extension is that you don't get hit with the failure to file penalty. The failure to file penalty is steep, right? So that's one that you don't want to have. So if you didn't get the extension in, um, if you did get the extension in, great, you're good till October 15th. You got a 6 month extension, but don't wait until October 15th to get your stuff together, right? But you do have some time to gather yourself and get your documents, get all your ducks in a row, right? Um, but if you didn't file the extension, make sure you get your return in as soon as possible because that failure to file penalty is pretty steep. And then on top of that, you have the penalties and interest. Now, I do want to note that if you're expecting a refund, then the deadline doesn't necessarily apply to you. Those penalties don't apply to you, and all of those things. So if you have a refund coming, you're good to go. But if you owe $1, make sure that you get that return in, or especially if you have the extension in, you're good. But if you didn't get the extension in, make sure that you take care of that. And if you can't, if you're concerned about holding off because you're afraid about the money, maybe you don't have the funds to pay that yet. That's all well and good, and there's some solutions for that, right? But the main thing, number one, make sure to at least file your tax return, even if you owe. Okay. Um, the extension only gives you the 6 month extension, but remember, if you owe, the interest is still accruing daily. Option number two, calculate the damages as best you can and see how much you owe the IRS, and at least send something in. If you can send $100 in, do so because it shows good faith, and it just starts to show that that you haven't forgotten about it, because sometimes we'll stick our head in the sand and we're like out of sight, out of mind. They haven't forgotten. That number is still ticking up every day. So make sure if you can send them something on your behalf. Okay. So that's option number two. And this is one that's kind of controversial, and you'll be surprised that I'm going to say this as option three. If you owe the IRS and you owe your state taxes as well, pay your state taxes first. I know that's surprising that I'm saying that, but pay your state taxes first. The states are actually a lot less lenient. The IRS is a lot more lenient than most states. The states don't have a lot of the programs in place. They come at you really, really hard. They have access to your put a lien on your properties really, really fast, put liens on your bank account. The IRS has a lot of protocols in place. They'll send out letters and things like that before they go to those extremes. The states don't. So make sure if you owe the state and the federal, pay the state first, because that's one that's going to, you want that off of your head, because they're not as flexible as the IRS is. And I know that sounds crazy for me to be saying, but trust and believe, if you owe a state balance, the state will come at you harder. They don't have as many options for installment agreements or payment arrangements. So make sure that you take care of those things first. The IRS has a lot of plans in place that you can qualify for, and I'll talk a little bit about those too. Let me check here. I want to see if there's anyone here that has any questions. Nope. Okay, so I'll just keep flowing. All right. So pay your state taxes first. Number 4, this is good. Try to find some money somewhere, right? Because think about the interest and the penalties that the IRS has, right? If you can find a comparable loan solution or a friend and family that can lend you the money to start to pay that down or pay it off, you'll be in a much better financial situation than to get that off of your head, right? So I know some people who've taken out smaller loans that have better interest terms or borrowed against their credit card and got some rewards for it. But definitely make sure that you realize that that interest is accruing, and if you can find a solution that has better terms than what the IRS has that you on the debt that you owe them, then those things are that they may be something to consider, because you don't want that debt that keeps building daily to keep going up, right? Option 5, utilize some short-term payment plans. So the IRS has a short-term payment plan if you're going to pay them in full within 180 days. And that is an easy option to apply for. You just actually go on the IRS website. It's called the OPA, online payment agreement. As long as you owe under $100,000 and you can pay within that 180-day window, then this is a good option for you. That is a short-term payment option, right? Short-term payment plan. And then option number 6 is a long-term payment plan. This one you may not want to handle yourself. Only on the so there's three options here within this long-term plan, right? The very first one you could do yourself. If you owe less than $10,000, you automatically qualify for, you're eligible for the guaranteed installment agreement. So if your tax liability is under $10,000, you're eligible for a guaranteed installment agreement with the IRS. You'll have an agreement to pay that amount back within 3 years. If you can pay it off sooner, great, because remember, the longer you take to pay it off, it keeps going up until it's paid off. That interest keeps accruing. So make sure that if you're under $10,000 in your balance due, that option of the eligible, the guaranteed installment agreement is available to you. Now, if you owe less than $50,000, then you're automatically eligible for the payment plan that's 72 months. This one, you're going to want to work with an enrolled agent, such as myself, a CPA, or a tax attorney to help you through that process, because it is a little bit more daunting. And then finally, if you owe greater than $50,000, there's solutions for you as well. But definitely, you're going to want to work with a representative who can step into your shoes and guide you through that process and submit any type of agreements for you, whether it's an offer in compromise, whether it's an installment agreement, whether you don't have enough funds at this time to collect and maybe you're currently not collectible. That is an option. But what happens when in those situations, you'll work with your representative, and then we'll determine based upon what you owe, what's the expiration date on what you owe, and determine what your options are for that, because some you may qualify for, some you don't, right? So if you do, the currently not collectible means that you don't have the income to substantiate the payment. So it just buys you time. It doesn't wipe the debt out. Now they want their money, but what it does do is it allows you to have a little bit of time to pay them back, right? And it gets them off your head, where they'll stop sending the threatening letters. Sometimes we may ask them to release liens off of your property. Sometimes we may ask them to release liens off of your passports, because if you owe over $50,000, typically that's when the process that they can start putting liens on passports and things of that nature, right? Option number 7 is just an undue hardship extension to pay. So say, for example, you had some health crisis or things of those nature, you can ask for an extension to pay, and it can be up to 18 months in some situations. Now, there are some rules about this. Now, the deficiency that you owe for can't be related to anything intentional or that you disregarded with the IRS. It can't be, of course, due to fraud or negligence or anything like that. But if it's really undue hardship that you didn't control but you're dealing with, that also gives you an option to pay. And definitely, excuse me, the filing and offering compromise is another option, and that kind of goes in line with based upon what you owe, what the options are for you. An offering compromise just basically extends, looks at how much you owe, kind of as a group of take all of, you may owe for several years. Sometimes that those debts tend to build up, and so we'll take all of those debts that you owe and then figure out what the balance is. How long do you still have to pay on that? And then we'll make a compromise to say, hey, we can't pay that much, but we can pay this much. Will you accept that? And typically the IRS will, if your situation is appropriate, but we have to evaluate everything to help you do that. We'll look at what your finances are, what your debts are, based upon your location too. So there's some expected spend for the location where you live too. So all of those things are taken into consideration. So that's a process, and that's called a resolution, tax resolution, tax representation, right? So you'll want to talk to an enrolled agent, CPA, or tax attorney to help you with that. Some people can do it themselves, but you definitely want to, if you do it yourself, you're going to need to be excellent at research. You're going to need to be excellent at keeping track of those things, and just really not minding jumping on the phone with the IRS quite a bit. And sometimes you're talking to revenue agents and that sort of thing. The beauty of having someone else to do it is we act as your power of attorney. And so you can kind of just step back and just kind of, hand the things over, and then we'll take care of the rest for you and just provide updates, keep you on track, keep you updated on what the deadlines are and what the dates are, and just kind of help you move along through that process, right? And number 10, make sure that even if you may be missing some documents, and maybe that's what's holding you up on filing or trying to pay it back, there you can go on the IRS's website and download your transcripts for whatever year that you need to file, and make sure that you get caught up. A lot of people haven't paid because they're missing years in filing, or have kind of fallen off the path of staying on track. uh, Jump back on board, right? Just jump back in and start getting those filed, because here's the other thing: none of these solutions are really going to work for you unless you're compliant, and compliant with the IRS means that all of your returns are filed and on time, right? So say, for example, if you do have some IRS debt that you're ready to start dealing with, one of the things that you're going to need to do is, the first thing that they're going to want to know is, are you up to date on your tax filings? And that has to be done before any type of offers can be made, any type of installment agreements, any type of short-term payments, long-term payments. They're going to want to know that you're compliant. And compliance means that all of your prior year returns have been filed, and that you're on time with the current year as well. If you need assistance, feel free to hit the link in my bio. I can definitely help you, and look forward to speaking with you. I will join you again here shortly. And feel free to let me know if you have any questions in the chat. I'm excited to be joining you guys, and definitely want to make sure that you feel confident in your tax situation, your business situation, and making sure that you understand you do have options. You don't just have to. Don't sit back in fear. Don't just keep shoving it in the corner and planning on dealing with it later. Go ahead and deal with it now. And like I said, one of the key things I wanted to tell you about is, if you've got a state debt and you got an IRS debt, put the state debt as a priority as far as starting the payment process on that. And then, but definitely don't forego the IRS debt. You want to make sure that you knock both of them out. But if there's a balancing act, definitely you want to get to the state debt first. And again, I'm Katrina Martin. I'm Katrina, the advisor to you. And I look forward to seeing you again here real soon. Talk to you later. Bye bye.